Mr. Sean McLaughlin. What's up, Shawnee?
What is happening, JC? Good to see you, my friend.
Sector rotation is the lifeblood of a bull market. That's how I learned it. And healthcare has been, with a few exceptions, of course, but healthcare in general has been struggling, had a hard time keeping up with the Joneses of the market, and some of the other sector rotation that we've seen. And now all of a sudden, here we are, Q2, and these bad boys are rocking again. So one of the things that I like to do is I like to look at relative strength. And even before healthcare got its groove back, Merck had already been working. And what I like that you like it too.
Yeah, well, look, we were talking this morning about different ideas. We talked about some metals trades. We talked about some semiconductors trades, and there's some good trades to be had in those sectors. But at least me personally, and for many of our subscribers, we're already in a lot of positions in those sectors, but we did not have anything on in the healthcare sector, and that seemed like a glaring omission. We needed to get something on the books, and this Merck trade feels like it fills that gap pretty nicely.
Yeah, I was throwing out names and you're like, that's a little extended. Throwing out names, it's a little extended. And then, you keep coming back to Merck. I'm like, all right, but it's not extended. Like, we're not just going to go out and buy call options. Like, that doesn't make too much sense, but we want to get exposure to the long side. You can see this little base short term, see the monster base over the last 20 years long term. So we don't necessarily need to just go out and buy calls. Let's help pay for that somehow. You called out the bull call spread. I immediately said, yep, let's do that. So why don't you walk through? I agreed, but it was your call. Why specifically did you like the bull call spread?
Well, specifically, the reason why I arrived on the bull call spread is because one thing that you didn't mention in that little ramble there is that we also have earnings coming up in the next, I think, 3 weeks, if I have my calendar correct. And I don't like to position ahead of earnings events if I can help it. So one way we can mitigate any effect on that is by going a little bit further out in time. So in this case, we went October. So that gives us, 6 months for things to shake out. And by selling out of the money calls against the long calls that we wanted to buy, that just, take that we're selling premium, that the extra premium that's starting to be priced into out of the money options as we approach earnings. So we're putting that premium to work for us to help lower the cost of participation. And if we're wrong, it's not going to hurt as much. But hey, you're showing those long-term trends there on those first two charts. I mean, look, we've got the trend in our favor. That's the big picture right there. That big picture trend is certainly in our favor. And then if you zoom into the yearly chart, that base there is pretty solid. And here's the thing about earnings events or any really binary event, right? We hear this all the time when surprises happen in the market, when big gaps happen. Well, more often than not, a surprise event usually resolves in the direction of the primary trend. And not always, of course, but if I were a betting man here, JC, and if I were to bet that there's going to be a big move coming out of earnings based on those two charts that you've just showed, I would bet that reaction would be to the upside. I could be wrong, but that's where I'm placing my chips.
So we decided that we're going to put on a bull call spread. We all agree. We're like, okay, terrific. Then Sean's like, hey guys, can you send me, a 1-year chart of Merck? And I'm like, 1-year chart of Merck? I'm going to send you a 20-year chart of Merck because I can't come here with a straight face and talk about Merck and a trade that we're putting on in Merck without bringing up this like legendary base that's been building for 20 years. I can't do that, right? I got to tell it like it is, Shawnee. Some people can't handle that, but me, I got to keep it real. And I can't have a serious conversation about Merck or anything having to do with Merck without reiterating that this thing is coming out of a multi-decade base. So anything we do, anything we talk about has to come with it, with that context, right? Putting things in perspective. So yeah, I gave you your 1-year chart. It's beautiful, positive momentum, nice little base, great, right? But that comes on top of this massive base. So when you talk about how if I were a betting man, first of all, you are. That's exactly what we're doing here. We're placing a bet. Second of all, you are, as a betting man, you are increasing your probabilities of success by trading in the direction of the underlying trend on multiple time frames. So does it always resolve in the direction of the underlying trend? No. Could we be wrong in this trade? Absolutely. But are the probabilities of success on our side? I certainly think so. So just to be clear, we are putting on a bull call spread, or we did put on a bull call spread in Merck, long the October 115 calls, short the October 125 calls. And why don't we walk through the risk management? Why don't we walk through how we're going to take profits? What's the mindset here?
Sure. Well, here's the thing with the risk management. Right off the top, this is a defined risk trade, right? So if the shit hits the fan and this thing has a monster move in the wrong direction, we already know the worst that we could lose in a worst case scenario, and that's the debit that we paid today to get in. That was $365. Now, I don't think we're going to have to suffer a loss like that because we also are watching a level that will act as a signal to get out, and that is the 108 level. If Merck sees a closing price, an end of day closing price below 108, that's my signal that we're either early or we're wrong. And either way, I don't want to stick around to find out which. I just want to get out. And if we do that, likely we'll be able to salvage some of the premium in the trade, and so that we won't have to suffer a 100% loss of our capital in this trade. Although I am fully prepared to lose 100% if that happens. I've sized my position such that if that were to happen, we just move on to the next trade. No big deal.
All right, I like it. Sean, I always appreciate kind of thinking through these trades, going back and forth. I like something, you don't. You like something, I don't. And then we come to an understanding. We come to an agreement. I even said, I'm like, listen, Sean, if there's no trade, we don't have to force it. And you're like, I like the Merck. I'm like, okay.
Man, if you and I could only have civil discussions like this about our sports teams, we'd get along great.
Well, if you didn't have such bad taste in your sports teams, then we could have better conversations. So there's that, right? So, all right, guys, just to reiterate, we put on a bull call spread in Merck, MRK, long the October 115 calls, short an equivalent amount of the October 125 calls. And we are in April, so I'm no math major, but that gives us about 4 months, right? Four and a half months?
That gives us 6 months, Mr. I'm not a math major, but that's all right.
When you're right, you're right, Sean. When you're right, you're right. You're absolutely right. Excuse me. We have 6.5 months for this trade to play out. Good call. So Merck, bull call spread. I like it. As always, I am JC Peretz. This is my compadre, Mr. Sean McLaughlin. Make sure to follow him at his new Twitter handle at Options Sean. Very fancy, Shawnee.
Oh, very fancy. I had to take what was available, and that one seemed to ring the most true for me. So there you go.
I like it. I like it because Sean, it was Chicago Sean for a long time. Sean doesn't live in Chicago. He's not from Chicago, so it made little sense. Option Sean probably makes a lot more sense. So kudos to you for making that change. Make sure to follow Sean at Options Sean. And if you're going to be in New York City, October the 24th, 25th, 26th, 27th-ish, that week.
April. Not
there
October.
There I go again. April. So we're looking at what, 3 weeks from now? If you're in New York City for the CMT Symposium, holler at us. We're going to be around. We will be at a conference during the day, and then we will be at some of New York City's finer establishments in the evening. There may or may not be some adult beverages being handed out. I don't know. But ping us if you're going to be in New York in that area, and we'll get together and argue about options. Deal?
I'm looking forward to it. It's going to be a lot of fun.
All right, guys. Adios.
See ya.